Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello, and welcome out to another Insights. A little bit behind, and I apologize for that, but let's get right to it, and going to try to knock things out, get straight to business as quick as we can. The market's been kind of crazy, but there's just not been a lot of candidates lately, so it's a little bit, I'm not going to lie, it gets a little disappointing sometimes. You find 5, and that's it, and it's like, how many of them hit? And so anyway, I'm going to start off with a quote like usual. And I like this one, and it just kind of hit me. It's better to be world-class at a few things than mediocre at many things. And I think part of the reason it hit me is yesterday in the market mashup is I got several questions, and some of them were related to one of them I should say, I don't know, there might have been more, but was related to which strategy is the best, and do you do multiple this and that? And the one thing I learned is this right here is it's better to master one or two things and to really stay focused on something than there is to try to be mediocre at lots of different things. When I first started, I started playing with every single strategy. And I thought, well, I'll buy calls and puts here, and I'll do spreads here, and I'll do iron condors, and then I'll do this, and I'll do this, and I'll do this. And, trying to employ 4 or 5 strategies, I mean, it's possible and it can be done. It just adds to the mix of, I can't say confusion, it's just a lot to deal with. It's almost like opening up a McDonald's and a Burger King. I mean, yeah, you're in the same business and you're doing almost the same thing, but there's just that enough difference and enough variance that, you're trying to make a Big Mac and then a Whopper. And yeah, they're both hamburgers, but it's better just to focus on one thing. Do one thing and do it exceptionally well. And that's why I straight call it buy calls and puts. I stick to it. I do the same thing over and over and over again. It's just a routine. So, and whoops, I keep doing that. I want to go look at the markets overall first real quick. And the SPX, we're in this little triangle, but it just broke out of it yesterday. And which is not a surprise. I did not expect it to break to the upside. I actually like the fact that it's broken down, and then today's candle was actually fairly bearish as well. It tried to rally. It actually rallied for quite a while, but by the end of the day, it had dropped back off and only up a little bit. So it's given us somewhat of a bearish look. So I'll be focused more on the bearish place tomorrow, especially if the market's moving down tomorrow. Might even want to position for next week. If there's anything that looks decent, like it might take off to the downside next week, because it looks like, and this is the important thing, it looks like we're starting to show some bearishness, which means it looks like we're starting to get ripe for another sell-off. We've got the little sell-off here after the big rally, October, pulls back a little bit, bounces, fails to get back up to the high. We got a Maribozu that tries to get to the next high, and then the next day it drops for 2 days solid. And then boom, we have a big up day, 3 down days in a row, and then today just a really small up day with light volume. And notice that the volume accelerated the last 3 days. Monday, Tuesday, Wednesday, it accelerated. Granted, it's not huge, but then again, the volume on the S&P doesn't make giant moves for the most part. So even though it looks insignificant, it's a pretty decent-sized jump. So volume accelerating to the downside, light volume today as it was up a little bit, all bearish signs. So I am looking for, actually kind of excited because I think we might be gearing up for another drop next week. So I'll be looking for stuff tomorrow. I've been mostly on the sidelines and just kind of watching and waiting for this right here. We've broken out of the triangle, which granted may not be a huge thing, but breaking down to a new low yesterday, at least in the short term, I mean, it broke this low here. And the volume, the bearishness of the volume, and the looks of the candles, they all say bearish. This one yesterday, I mean, up quite a bit and then dropped off very briefly. I mean, very quickly. Within an hour or two, we dropped, I think it was 30 points, if I remember right. 30 or 40. I think we went from 2080 down to 2040. It was almost 40 points in like an hour. So there was a quick acceleration to the downside. So I'm looking forward and gearing up for a possible drop tomorrow. Very similar look on most of the other markets. Transports has broken down even worse, got below, wow, even below that 7,700. I saw that the other day. So Russell just flat, neutral, sideways. VIX flat right now. So I want to go into the little guys. Sorry, the little remnants of this cough still cropping up. Get to the little guys and only 6 candidates. And this is what's challenging. It's been challenging the last few weeks, actually, 3 or 4 weeks. Just not a lot of candidates. But hopefully this next week it will change. We'll see what tomorrow brings. And over this weekend, I'm going to go and look and see if hopefully we can find some good solid plays. But AES, big downtrend. I mean, it's been in a downtrend for quite some time, over a year. And we're down near, well, not all-time lows. I mean, actually, we're talking 2,000 is, we're at $1. So there is that potential there to drop that far. But we've been in this solid downtrend. The last couple of months, it's kind of gone sideways. In the last couple of weeks, it's dropped off pretty significantly. We had that little hammer 4 days ago, and then it drifted back to the upside. And this looks like almost a perfect falling through method setting up. I wouldn't say perfect, but pretty close. But you've got the increase in volume on the drop. You've got the light volume on the rally back to the upside. Roll reversal potential right there at 935, 936. So we're sitting right at the entry point. Not a huge. I mean, we're talking about 36 cents of gain. But we're also looking at the options should be really inexpensive. Should be very, very cheap on AES. I'm going to guess 50 to 75 cents. So if you get 20 cents out of it, you're still making a good rate of return. And if this thing tanks and it drops down to, $6 or $7 in the next couple months, maybe you get, this is one where you could, do a sizable position, even with a small account. And if you got a $2,000 or $3,000 or $4,000 account and the options are, say, 60 cents, you can go pick up 5 to 10 contracts. And if you can take out 4 or 8 of them and still have 1 or 2 there and it just tanks, I mean, you're probably going to be looking at the 10s, maybe 950s if they have the $half strikes. And if you're paying 60 or 80 cents for them, you're talking, what, 350 to 800, 900 bucks, somewhere in there for 5 to 10 contracts. And if you sold out of 80% of them and got all your initial capital back and left 1 or 2 contracts there, and this thing breaks 9 and goes down to $7 or $8 or $6, it turns into a grand slam. A little tiny trade could turn into a huge one. Just a thought. Abercrombie, sitting right there at the entry point. Nice little shooting star yesterday. This is the interesting one where we've got such a big jump, and I'm pretty sure this is earnings related. But we basically have a flagpole, and the pattern that I saw when I'm flipping through charts was a pennant pattern. And that's really what we have, which doesn't very often turn into a reversal. But when you go to this template here, you've got Stokes and MACD both looking very bearish, both reversing big time. You've got the shooting type of star yesterday, and then a follow through today. The only thing I'd like to see would be more volume on a day like today. But if it accelerates to the downside tomorrow, which is the tough part, it's a few pennies beyond the entry point. So if it gaps down tomorrow, yeah, we missed it. Oh, well. If it gaps up or dances around it and then starts to accelerate to the downside, that's perfect. But I would also be a little more cautious because of the pennant pattern that's there. They don't very often turn into reversals because of the momentum that we have that creates that flagpole. BX. In fact, you know what? I'm going to step back here because Keith asked me to cover this, and I think it's a good idea, is to cover because we talked in the market mashup about the emotions behind the patterns. And I think, quite frankly, it's been 6 years now since I created Patterns in a Flash. And considering it took me probably 200 or 300 hours to record all that stuff and go back and edit it and make sure it was right. I don't go back and listen to it. I just don't. And honestly, the sound of my own voice is like, it's not that it's bad. It's just it's just awkward, to have to go back and listen to yourself. But at the same time, I think I go through that in there, but I don't remember. You can correct me if I'm wrong, but the pennant pattern or the flag pattern, basically the same thing. We see this big flagpole, and when you think about this not really turning into a reversal very often, the reason is because of the momentum. Because if people are this excited about it, to push it from, well, what were we at, 1936 up to 26, so $7, which is almost 50%. It's about 45%. That's a lot of excitement, a lot of momentum. And so basically, I know I talk a lot about the when stocks move big, especially like this, it's typical, just like if you sprint up a hill, the faster and the further you run up that hill, the steeper it is, the sooner you're going to need a break, right? You got to take a break. Just physically, it's exhausting. But I'm sure some of you have experiences in life where something has also been emotionally or mentally exhausting. And so even though physically you may not be, your body's not exhausted, your mind is, and it just kind of shuts down. It needs time to breathe, and you need a break, you need to sleep, you need rest, you need to just veg out, maybe watch something that's mindless, read a mindless book. I don't do that because I read for learning. I've never been able to read books for fun because my mind drifts off somewhere else, finds lots of squirrels, and then I'm reading words on a page that I don't know what they're talking about. And then to me, it's like trying to imagine what they're talking. I'll watch a movie. Anyway, that's me. A lot of people love reading. They read for entertainment, and hey, more power to them. Anyway, but if you're emotionally and mentally tired, you take a break. If a stock is, if the traders have pushed it way up here, they go, whew, man, I don't know how much further this thing can go. And maybe fear kicks in, or they look at it and say, I'm going to take some profit. Whatever the case is, there's people that don't want to sell it because they're up a bunch and they think it's going to keep going. Because we all do that, right? We get into that euphoria stage where, woo, I bought it at 20 and now it's at 26. Yeah, it's going to keep going. It's going to go to 40. It's going to go to 40. I'm going to make even more. Right? So you got people that hang on to it. You got other traders, shorter-term traders, that will sell it and take their profit because they just made a killing. And then you've got other people that get excited about the news and they say, well, wow, I want to own this thing. I know it was at 23 weeks ago, but now it's at 26 and it's probably going to go to 40, so I want to buy it. So they'll start buying it here, looking at this saying, whoa, it's making a move. Let's go. And so they'll start picking it up here. So you've got really all three that kind of create this pattern. You've got the big move, which is people buying it and picking it up because the news came out that created the flag pattern. And then you got the shorter term traders that are taking profits, which causes it to sell off. But there's not enough people selling. There's enough people holding and hanging on to the stock that when people see a little pullback after a big run, they go, hey, I want to buy this thing. And then people get excited about thinking it's going to go higher. And so they buy it. And then those that didn't get their profit at the peak when it sold off the first time, for example, here, let me zoom way in here. So you've got some that it's up here at 26, 27 bucks. It sells off a little bit for a few days. And then those that are still excited about it come in and buy it again. They go, good, it pulled back. Let's wait for a pullback. We'll get in on the pullback so it rallies up a little bit. And then those that didn't sell at the peak up here go, you know what, I want to get out. And so it creates this back and forth. It creates this, some people are excited about it. Other people want to take their profit. And the question becomes, who's going to win? So you get this back and forth movement for a couple weeks of people on different sides of the emotional fence, bullish versus bearish. And the question becomes, who's going to win? Generally speaking, this type of pattern, the bulls will win because of the flag, because there was so much excitement and so much energy here and so much momentum, it will break out to the upside and continue. But it doesn't always work. And right now it looks like this thing may drop off. So we'll have to wait and see which direction it decides to go. And that's the challenging part. But as far as trying to examine and look at the emotions of why patterns do the things they do and how they kind of play out, hopefully that was a hopefully that made sense. So, and I appreciate the request. So, anytime if any of you have something you want to, you want something like that, and I'll try to, excuse me, I try to implement as many things as you ask for in. I know I haven't gotten to the get to the options pricing and stuff, but I'll try to do that over this weekend. I'll try to remember to do that and implementing these things, and I'll try to keep doing the what I just did there with Abercrombie as far as the emotional side. So, and if I slip up and get a little bit off track, don't be afraid to whack me upside the head. Send me an email or send supported email. Say, hey, I want this and this and this. So I'm always wide open to feedback. I want to hear what you have to say, and I mean, you're here for you. You're not here for me. So anyway, with that being said, BX. I'm going to this real quick. Nice little hammer, little morning star type of pattern with the hammer, and nice little pullback over the last couple days. We had kind of a bullish gap there. And we'll see. I think this may, if the market does decide to go up, this is probably going to go that direction. If the market tanks, this bullish trade will probably be negated. Discovery broke down, needed to pull back to the upside or rally back a little bit to the upside. That 29.10, I expect possibly a roll reversal. Basically what we're looking for there. Platform specialty. Beautiful little channel. Not terribly excited about it. The last two cycles, it's rallied back up, pulled back down right off of those tops. Eventually, it's going to break out of here. Really, I put this on the list partly, not only because there may be a little bit there. Nice thing is, you're talking a buck. What is that? A buck 80, buck 78 of potential. It rallied a little bit today on light volume. So there's a decent amount of potential there to the upside if it rallies. But really, I wanted to put this on the radar because next week we may look at it, especially if it breaks down tomorrow, as a possible breakout to the downside. But who knows? It might take off and rally to the upside. It might pull back tomorrow and then bounce. There's lots of different scenarios that could happen. And last but not least, on the little guys, Twitter, and bounced today off of that support level. Solid volume, actually. Got a little bit outside of the entry point. So... But I think, the nice thing is this thing's got $4 of potential, so it's about 40 cents out. So barring a gap open in the morning, I like the looks of this. This looks good, actually, especially if the market's up. Let's see what indicator. Yeah, indicators are starting to look pretty good, too. We got a pinch. So we'll see what happens in the next tomorrow. Let's go look briefly at the big guys and see if anything has played out here this week. Alaska, not really APC. That's the one we missed. Gap down Monday and just ran without us. It's too bad, and this is the frustrating part sometimes. It breaks out Thursday or Friday of the week before, and there's nothing you can do about it. It's too late. I was just hoping for a pullback to the upside. Cardinal Health has triggered a couple times in the last couple days. CCI kind of triggered today. Actually, I kind of like this. If it takes off to the downside tomorrow, I'll be looking at that. Deere. Still waiting for a break to the upside, if it does at all. Dr. Pepper. This one broke out a little bit a couple days ago, but now it's definitely on the fence. Not too excited about that anymore. IACI needed that one. Well, it tagged it, but probably wouldn't have entered it on Monday. So would have been nice, but, woulda, shoulda, coulda. Monster gapped up Monday and then sold off. Good thing didn't pull the trigger on that one. Lots of potential, but P&G been going sideways for the few weeks. It's right in the middle of the range. It was one of those that busted out on Friday of last week. Was hoping for a good pullback. Hasn't happened. So that's gone. T-Rowe price hasn't gone the right direction. We're looking for it to go up. And XCC gapped down Monday morning, completely leaving the trade off the table. So, again, not a terribly exciting week. The last 2 or 3 or 4 weeks has been kind of stagnant. So, it has been, I don't know if I want to say tougher. I know I say that a lot. It's tougher, but trading's always tough. It's just sometimes some periods are boring and kind of, when other periods are exciting and fun. So I'm hoping that the action that we're seeing in the market has us gearing up for a drop. I know that sounds, some people, it's pessimistic. Hey, if I can make some money when it tanks, awesome. It's more difficult to make money in sideways markets like this where it's just chopping around. So I like things that are trending and moving. And so when it's just going sideways like this, I just try to steer clear or sit on the sidelines or, keep it shorter term. So for the meantime, I'm just sitting it out right now. But we'll see what tomorrow brings. Like I said, I might initiate some positions tomorrow and see what happens. So with that being said, y'all have a great night, and we'll see you very soon. Bye bye.